Hi, everybody. My name is Tim Monget, and today we're going to tackle the aspect of real estate investing for condos right here in Calgary. Now, whether you're a seasoned pro or just starting out, this information you're going to find is gold. Stick around at the end because you have all the investment tools you need to work for you. Now, have you ever wondered how to ensure your Calgary condo investment is a clear winner? Video, I will show you how to break down the numbers to ensure your Calgary real estate investment is a clear success. Below, if you want me to send you a link to anything I use or you have any additional questions. Hi, everybody. My name is Tim Monget, and today we're going to tackle the aspect of real estate investing for condos right here in Calgary. Now, whether you're a seasoned pro or just starting out, this information you're going to find is gold. Stick around at the end because you have all the investment tools you need to work for you. Video, I will show you how to break down the numbers to ensure your Calgary real estate investment is a clear success. Below, if you want me to send you a link to anything I use or you have any additional questions. Now, have you ever wondered how to ensure your Calgary condo investment is a clear winner? All right, now let's dive into the basics, the specifics of a property, okay? Basically, it'll be all numbers that we're looking at now. Now, this property just came on the market one day. DOM means days on market, and it's listed at $153,900. Okay, let's use a real lifetime example of how to calculate if this is a clear winner. Now, what I've done is I have highlighted in yellow the numbers that are important to look at. Comment below if you want me to send you this page so you'll know what numbers to use. Obviously, for most important thing is the list price. It is listed at $153,900. That sounds incredibly like a really good price. All right, next we write down RMS. That is the registered measurement. That's the legal measurement that is certified by a person who measured it correctly. Now, one thing that I like looking at, the list price per square foot here, it's at $313.61, basically meaning every square foot of that house is worth $313. That's how it's broken down into. I like doing that when I'm comparing condo to condo. That gives me just a good idea of the value. The other things that I notice is the age and the type it is. So this is a low rise, meaning there's going to be no elevator. It's a condo, yes. And taxes, $686 per year. Restrictions, there's pets allowed, which is important. Now, I'm using this example because it says this is excellent revenue property. And the condo fees are low. All right, condo fees, $419.38. And what does it include? It includes heat, insurance, maintenance grounds, meaning maintains the grounds exterior. You don't really have to do anything outside. Now, if we look at the bottom here, it is saying the tenant is currently paying $1,325. Now, let me say that again. It is saying the tenant is paying $1,325 per month. Once we have that information, let's go into our calculator and determine what kind of cash flow we're getting. All right, now let's talk about rental income and expenses. This is a key component of your overall investment, so it's very important to get it right and enter the right information here. I'm using calculator.net, specifically that rental property calculator. Comment below if you want me to send a link to this website. Now, page 1 basically wants you to enter all the information so it can give you the values for return on income, cash flow, and your appreciation for the next 5 years. First thing we enter is the purchase price, $154,000. Okay, there. Is this loan? Yes. Our down payment, typically banks want you to pay roughly 20% for a rental income or more. So let's put down the minimum payment we have to do is which is 20%. Interest rate now, I will be conservative and I'll put it at 5.57676 here, okay? And loan term is over 25 years. Closing cost is what is the cost of basically to ensure that this property goes in your name. Most of the closing cost is lawyer fees. For a condo, it's about $1,200 to $1,400. I'll put out $1,800 just for incidentals as well. $1,800 here. Done. Do we need repairs? Yes, we do need repairs there because there's a slight mold issue on the patio door. I'll put that at roughly about $750. And what's the value after the repairs? Did it increase the value of this property? Not really, because a mold is just a maintenance thing, and you're not really enhancing it. Now, let's look at the expenses that will be happening annually. Property tax is $686. That's what we got from the MLS sheet. Next is the total insurance. This is an approximation, but it's about $1,300 a year. And again, here you have annual increases there. I'll put everything about 2%, even this one here. Now the fees, that's the condo fees per year is $5,028. We got that from MLS, where it's a condo fees per month is $419. So you multiply that by 12 and you get this number here. Maintenance costs, there's really not going to be that much maintenance in a condo. Major thing will be your appliances, if they need to be fixed or repaired. You've got the fridge, stove, washer and dryer are not included. They're part of the, they're not ensuite. What I'd like to do is just build up a reserve fund. So I will put in an annual $1,000 per year just to set aside, okay? And there's no other costs as well. So now we've got expenses every year. We figured this out here. Let's go get the income where we're getting. Currently, the income is stated at $1,325, which is pretty good considering it's a studio. So let's put it at, for argument's sake, let's put it at $1,350, okay? And yes, it is increasing quite a bit. So I'm going to say even like 5%. That's how much Calgary rental is going. There's no other income here. Vacancy rate typically is 2%. I am putting it at 0. Really, in this market, you should have zero vacancy rate. You should even have a waiting list, as they do in other cities here. Management fees, you should be able to manage this property yourself. I'll put it at 0. Now, we don't know what the price will be when you sell it. Basically, what they're saying is that if you want it here, is a certain price you'll sell it at, or do you just want to see the if you hold it for 5 years, what the value will be that property if it's appreciating by a certain number. Typically, I like to put that at 2% because that is the average for the last 50 years, okay, of a residential property appreciation. Now we have all this information. Let's calculate what we're getting for cash flow and return on income. There it is. That's what we have. This is what's the most important thing here. Now, this is interesting. Typically, when you see a cash flow of negative, I would say that's a no. However, we're in a market where the rents are vastly increasing, and in a year, that'll be a positive cash flow. So I am pretty optimistic, even if it's a rental negative cash flow, I still might look at the property once I've determined other things. But please note, this is very important factors to determine overall value of the property. All right, now we've basically put all the information in. Let's take a look at the results, and we can determine if this investment. Let's take a look at the potential return on this investment. Okay, the very first thing is that we're going to check what kind of return are we going to get on the down payment that you've put down. Roughly, you put down 20%, which is a little over $30,000. What it's saying here is that for 5 years, if you invest into this property, you're going to get an internal rate of return at approximately 11%. Your total profit total over the 5 years is $23,000, meaning after everything is done, you should have an additional $23,000 on top of your $30,000 that you invested. Over 5 years, this is giving you a cash on cash return at 70%. So that $30,000 that you put down as down payment, you get that and $23,000 extra. Not extra, but that's your profit. Per year, that's a 5% cap rate, they call that, and which is not bad. You want to go between 5 and 8%. So this is the bottom you're getting. And this tells you the totals that you're getting there. Now, in your first year, you'll notice that you're actually losing $1,000. However, if you break it down over the next total, each year after 5 years, you'll notice you're getting, in the first 2 years, you're actually getting, well, for second year, basically breaking even. So first year, you're going to lose some, and then after that, you start making money. Now, typically in a normal year, you would not purchase a property that's got a negative cash flow at any month. However, because the Calgary market is so healthy right now, you may look at this as an opportunity, but you're going to have to do some further analysis, which we'll do next. Now, let's take a look at the Calgary condo market overall. I'm going to use Real Info Report. I find this a very reliable source. If you want me to send you a copy, comment below. All right, right off the bat, let's take a look at what kind of market are we in. Now, when we see, right away it tells you right here, I can see quickly that this is a seller's market. Right here, you see that? What it's saying is that 70% of the condos that get listed on MLS get sold. It's a very healthy market. These are the previous months of telling you what the rate was, just for comparison's sake, okay? And it has changed quite a bit. Even just a year ago, only 35% homes or condos that were listed got sold, compared to today, where 70% of condos that get listed are sold. Basically, what's that telling you? That there's more buyers than sellers, which makes sense because Calgary has a large immigration net surplus currently. Next, let's take overlook at the price and the trend. More importantly, okay, this price is of today. But more importantly, let's see where the trend is going. As you can see right here, what's happening is that I'm just going to quickly circle just in case you can't see it. Every month, condo prices have increased. 1%, 2%, that's massive. Meaning, typically that's a 12% return, not a return, but an increase in a year, and the average is 2%. And I'll quickly show you over the last 10 years what's happened. Even on an increasing market, last year the prices actually went down slightly. So even in a healthy market, there are months where prices will decrease. That's important to realize now. Now, quickly look at this. This is the first year that the prices exceeded what was in 2014. Over 9 years, close to 10 years, the prices either stayed the same or they went below. Mainly because from 2016 to 2020, there was such an oversurplus of condos that were built, and there were more sellers than buyers. So the prices continually went down. And now it's going up, and this will continue to go up because Calgary is undergoing a fundamental change in entry for first-time home buyers because of the price here and the interest rate as well. Okay. Now, lastly, this just tells you the condos that are available versus the number of condos sold. 1,000 condos available, 706 sold. Very healthy market there. The other thing, and that's important to note, is the days on market. Not very long, 28 days here. Right now, currently it stands at. What that means is that if you're going to buy a condo for investment property, you don't have much margin for negotiations. If you see a good price, you've all your numbers on it, numerical analysis, you're qualified, you're going to put in a very competitive offer, and you can expect to be closed. So basically what it's telling you is that you will have your due diligence done, and you're going to, just like Warren Buffett says, you're going to think slow, act fast. In summary, this is a good, healthy market for condo investments.